Hey everybody, it's James here with Crypto Common Sense, and I wanted to sit down this evening and shoot a version of Bitcoin Bytes. So in the last video, or I think it was 2 videos ago, I talked about the fact that if you were bearish on Bitcoin, that it could be very dangerous to try to get into bearish positions this late in the game, because even if a counter trend rally formed, that rally could be very strong and of course end up washing you out if you try to get short and you weren't already in shorts with breathing room. And over the last few days, we've seen quite a bit of activity on Bitcoin. I'm going to talk about that in this video and just kind of briefly give my thoughts. So again, this was that last video. If you didn't check it out, it's still relevant. It's probably worth watching. It's called Is the Bitcoin Bottom In? In this video, we're going to talk about this. We're going to talk about what's going on here. I made a post on Twitter tonight. Probably came off a little harsher than I meant for it to, but essentially I said that the bulls, or excuse me, the bears who are being liquidated right now are a lot of the same people who were bulls at 69K. And it's the same people who are, kind of late to the party. And if you're going to jump in late, it's often better just not to jump in at all and just to sit out, because jumping in late, a lot of times you'll end up being right, but you get stopped out before you can realize any type of gain. And it's interesting to me that we had almost no liquidations for several weeks. And then all of a sudden in the last 2 days, we had over $600 million in short positions liquidated on Bitcoin alone. If you look at all coins over the last 2 days, they're saying right around 1.2, a little over $1.2 billion in liquidations. And how does that happen? Well, it happens exactly like I talked about in that YouTube video, which is people get off sides. The market's been ranging, they get impatient, and they want to get into a trade. They want to get into a trade. Got to get a trade, got to get a trade. Well, this is just ranging sideways. You really don't know which way it's going. And so just automatically jumping into a short, not the best idea in the world, especially when it's throwing down these tails, which is really saying that there's still some level of demand here. Maybe it's not a bunch of demand. There's not a ton of volume on those. And we can obviously see there's really more selling volume than buying volume, which again is what makes me think this is a false rally. And the other thing that makes me think this is a false rally is this buying, it's really short covering. It's really not a lot of bullish people, in my opinion. When I look at this, it doesn't appear that there's people just out there just gung-ho like, oh, I got to buy Bitcoin, I got to buy Bitcoin. What's happening is this is being pushed up, and bears are being forced to cover positions. Well, how do you cover a bearish position? You buy Bitcoin or whatever asset you're short on. You have to buy to close that position. And of course, when somebody's liquidated, it auto buys that asset back. And so what you're seeing is this, liquidation events. And I'll show you, you're wondering, well, how do you know that? How do you know? Well, you don't know for a fact, but there's some really strong breadcrumbs that get left behind during these events. The main one is you'll see spikes of volume on a single candlestick and then very little follow through. If you have like a real buying pressure, real demand, you'll see, ascending volume. So you'll see volume getting stronger as price moves up because more and more and more people are piling in. When you're getting liquidation moves where it's liquidations pushing the price up, which is, by the way, is how you get liquidity gaps left behind like this big candle. Look what happens. You see the volume? Very little volume, boom, a ton of volume on one single candle, and then boom, very little volume again. See that? That is a sign that that move is really just a stop hunt. It doesn't mean it can't go higher or can't go lower. It's nothing of the sort. What it's saying is that it's not true demand. There's not people just buying up Bitcoin. It's just bears being forced to close their shorts. All right, so we saw that it spiked up over 1,000 volume, and then immediately the next candle is 500, the next candle is 300, next candle is 250, and just kind of dwindled. Nobody's interested, and it gets down here. This is probably buying pressure right here when it pulled back and retested this level, right? You had the top of this level back here. So a lot of people probably were buying there, and if you look, see how the volume looks different? So if having a single isolated candle, you have several buying candles in a row. This was probably legitimate buying pressure. And then it just kind of ran out of steam up here and kind of ground sideways. So really important to note that, when you're getting these moves in Bitcoin, you really need to be paying attention to the volume because it's telling a big part of the story. Number one is obviously the price action itself, and number two is volume will help confirm what you're seeing. And I was very happy, of course, with Racing Rabbit, which is my proprietary indicator, because yes, it did give a signal here. And yeah, it gave a signal back here. It was wrong, right? It's not 100%. Like I talk about all the time in videos, trading is not about being 100% right. You're going to lose a lot, at least half the time, maybe even 2/3 of the time when you're trading. It's all about making sure that you make more when you're right than you lose when you're wrong. And just as an example, we won't go too deep into this because I don't turn this into a sales pitch for this indicator. But just as an example, if somebody did get long on that candle and they did use this last pivot as a stop loss, there was a potential, and depends how you manage the trade and all those sorts of things, but there was a potential, which is always fun to think about, for about 12, almost 13 to 1, right? And that's if you close the trade at tip top. Of course, if you're still sitting in that trade, be up about 11 to 1. So again, if you're risking, say, $100 for easy math, boom, $1,100 payday. Really simple stuff. The indicator did spot the breakout, which was awesome. So that's kind of what I'm seeing on Bitcoin. Right now, we're not getting any confirmation that this is a legitimate move. It really does look a lot like a counter trend rally to me. This did form a pretty nice base down here. And so again, we don't know how high this will move. What I would be very cautious on is if you look at the chart that I posted up back in November of 2021, that's this chart. Of course, that back then we were back here in complacency. Moved down, so this is very likely going to be anxiety. And I've been saying that, we're due for this denial bounce. We're due for this denial bounce. There for a long time in my videos, if you went back and look, you'd see that I had a line pointing back up to this direction and then down to this area here. This is very possible that we are finally getting that denial bounce. We did make quite a bit of progress. I say we, of course, I'm talking about Bitcoin. Bitcoin made quite a bit of progress versus the QQQ. QQQ did not have a good day, right? Stock market actually started out strong and then fell apart, which I'll talk about in a second. But yeah, Bitcoin is moving up against the QQQ, and maybe we're finally going to get this denial bounce, and then we can move into the panic and capitulation phases, which is really, if you're bull, it's what you want to see, because when you see capitulation, that's like a big, flag being waved that says, hey, get ready to buy. The bottom is near. And if we don't see capitulation, then it's really tough to get bullish on an asset because there's almost always a capitulation event eventually. There wasn't much of a capitulation event back here. It was just kind of ground sideways. And that was one of the reasons I was so bearish in 2019, saying I thought we'd go back down and visit that $4,000 level because I felt like we needed to wash people out. And of course, that's what happened in hindsight. Me in 2020, everybody can remember that. And if you go back and look, you'll see, back there in March when it came down, there's going to be this massive, massive volume spike. And that was bulls being liquidated is what that was. And of course, then you turn around and had massive buying volume, which was one sign that you might want to start accumulating a position on Bitcoin back there. All right, so that's kind of what we want to see. We want to see that giant spike, that red spike, and then a giant green spike right after it. Like we had some nice red spikes, but there's no follow-up, no buyers coming in saying, gosh, I think, $20,000 Bitcoin is just the deal of the century. Some people maybe, but nothing like back here. All right, just nothing like that. So keep that in mind. That's what you're really looking for, is you're looking for that confirmation from volume. All right. And again, from the QQQ side, we could be getting that denial bounce. This is actually the same chart, just without all the, the extra writing and charts and stuff on it. And if you look, it would make perfect sense to get some kind of bounce here, because if you come down to this level, hey, look at that. That was actually that high back in the summer of 2019. See this? So it's really just retesting this support level. And a lot of times, even when you're going to move down further, you'll at least get some kind of bounce or some kind of reaction there, because some people are bullish at that level. And so you'll get that initial, bounce off of it. And a lot of professionals, even if they're bearish, for example, like I'm bearish right now overall, like I'm not looking to get into any new short positions yet. What I want to do is I want to wait, because, as I talked about in that last video, trends look like staircases, and I don't want to be shorting the dips. Not even in a bear market do I want to short a dip. I want to wait for that rip. I want to wait for that counter trend bounce and try to catch one of these. If I'm going to add to short positions, or if I'm going to buy bearish puts, I want to catch those bounces and short the tops of those, not the bottoms of those. So you'll have a lot of people who are bearish, but they're simply sitting out because they know that it's likely to bounce here. They're going to let it bounce, maybe get back up to somewhere in this zone here, for example. And then if it does, up here would be a much more lucrative short position if it goes back down, and also a higher probability of being correct, right? So if you get short up here, then you get to ride this way down, versus if you get short down here, you're probably going to get stopped out, or it's likely that you'll get stopped out. So it makes it less appealing as a trade. And so a lot of people who are bearish are just going to wait and let this pump do its thing and then enter those bearish positions. So it's really important to keep that in mind. If we take a look at the QQQ, it was a really interesting day on the QQQ. Really, really pretty day, depending on, whether you made or lost money. Obviously, that might change your opinion, but I like days where price action is very, very pretty. And pretty meaning it just does exactly what you would think it was going to do. And so if you look at this, of course, this was the high back here in early October, so it made sense that we get some kind of pause there. Then you zoom into these smaller time frames, and that's where you can really start finding some good trades. So yesterday, it moved right to that level and then kind of fizzled out overnight, moved back down, so opened with this gap. And then the stock market's been doing this a lot lately. It's been throwing like a false move in there, and then a couple hours into the day, reversing course and taking all that move back. It's been doing that over and over. Not every single day, but more often than not, it's been doing this kind of thing. And so it was interesting to me because that's, all this really did was move right back up, fill in that gap, left behind a couple of bearish wicks, which could have been a signal, depending on how aggressive you are, to look for some short positions, and then had this massive move down. And to kind of give you an idea of why price action trading and day trading is so lucrative, like just take a look at this trade here, no indicators, no nothing, for example. And if you got short, say, when it broke the low of this spinning top candlestick, you had a couple of wicks coming in here, you were testing this resistance, you had filled in the gap. All those reasons might be for a short. Say you did get short there, and say you did put your stop loss at the top of that candle. It's about a 43-cent stop loss. And then if you were going for, say, a 3-to-1, well, you got it there. And one of the things that I'll often talk about, like in my courses and stuff, is once you get a 3-to-1, try to ride that trade as much as possible. And that's always a difficult thing to do for people. But one of the simpler ways to ride a strong trend is to just simply move your stop to the opposite side of the candle. So if you're short, for example, every time a candle closes after you've hit your profit target, you just move the stop to the top of that candle. So you're moving it basically a trailing stop. So here it would have hit the stop loss. So when this candle closed, stop would have went there, then it would have moved here, then it would have moved here, then moved here, then moved here, and then moved here, and then you would have got clipped right here. So no, you wouldn't have got the entire move, but that would have been a 7.6 to 1 reward to risk ratio, which is really good. If you're risking $100, you made almost, $760 roughly. You have a little bit of slippage and things in there, but around $600-700, right? If you risked 100. If you were more aggressive, maybe you're a bigger trader, risked 1,000. Hey, there you go. It's $6,000 or $7,000 payday over the course of about 2 hours. So days like today are just really, really fun days. They're really pretty days. I actually did not trade this. So before anybody says, oh man, did you take that trade? I didn't take any trades today. And I talked about this in my Discord. I was waiting on my new excavator to be delivered because I'm starting a excavation company on the side. And no, I'm not leaving trading or anything like that. I've never used an excavator in my life. But my stepson's been doing that kind of work for about 15 years. And so I'm going into business with him. I went into business with my younger stepson on some other stuff, and I wanted to be fair and offer them both an opportunity. So I bought an excavator, and I'm in the process of buying a truck and a trailer. And so, yeah, the excavator dealership delivered it today. So that's what I was doing. I was waiting on that to be delivered and then kind of playing on it a little bit because I'd never been on one before. So that was kind of cool. But yeah, really pretty day. Really, again, one thing I love about trading, and especially day trading, is all the bigger picture stuff. It's fine if you're looking for investments and macro level stuff. But as far as making money on a regular basis and having a consistent stream of income, and day trading doesn't care what the bigger market is doing, right? You just simply you look at the bigger market, of course, you look at the bigger chart, the bigger time frames, kind of get an idea of where your support and resistance and key levels are at in case you're coming into one of them, like this was a key level, right? And then you can zoom into those smaller time frames and take those trades that last an hour, 2-3 hours, and still make really good money, because you have smaller stop losses, allows you to take bigger positions. And that's how you're able to really leverage smaller amounts of money sometimes into, really life-changing incomes. So yeah, overall, if we take a look at Bitcoin, like I said, it looks like it's in a bit of a relief rally right now. Not surprising at all. If we take a look at the QQQ, which of course is an ETF for the NASDAQ, it's a little sketchy right now. I don't know that I could really pick a direction. Obviously, we come back up, we've tested this level, and so far we're failing, but there's 2 days left in the week, so let's see what this candle looks like in 2 days. It could pump the next 2 days, and this could be a really big green candle, in which case it's likely this is going to go higher and be some kind of relief rally inside the stock market as well. Or it could be that that was all that is going to have, and that this is actually lower low, and this ends up being the lower high before another leg down. So it's tough to say. Overnight, the US 100, which represents roughly the top 100 stocks on the NASDAQ, it trades almost 24/7. I think it closes an hour each day. I don't trade this specific asset, but I look at it a lot. Closes, I believe it's an hour each day, and then it closes on the weekends. But it's not really doing anything overnight, just kind of grinding sideways. So we shall see. By the way, if you're not aware of this, you can get an idea of where the QQQ is going to open by watching the US 100, or an easier way is just to pull up the QQQ. Like when you're looking at those gaps and things, just put it on a smaller time frame and then turn off your regular session, turn on the extended, and it will actually show you the trading that's happening after hours. And so funny, I shared this with my Discord this morning, talking about how if you set orders at these key levels, a lot of times when liquidity is lower in post-market and pre-market trading, you'll actually be able to get an order filled, and then it immediately goes to your target. So there was like 6 of these on this period back here, and there was already one today. Like it jumped up here. If you got filled there at around 284.17, then literally within 15 minutes, it had already fallen back down over 2%, over $6 a share. So there's some opportunity there. Do with it what you will. All right, I'll leave it at that. So anyway, I'm going to go ahead and wrap the video up there. I hope you enjoyed it. As always, please remember, I am just some guy. I'm sitting in a spare bedroom, and nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. If you like this video, make sure to give it a thumbs up, make sure to subscribe to the channel, and make sure to leave me a comment. That really helps with the YouTube algorithm. Of course, you can check the description. There's a link down there where you can join my trading course, as well as my proprietary trade software. I believe both of those will help you become a better trader. This is James with Crypto Common Sense, reminding you to please trade safe, and I'll talk to you in the next video.